Open.
Good afternoon, Nirav. Nice to see you.
Chairman sir, Sudhakar ji, good afternoon sir.
Good afternoon, everyone.
Yeah, good afternoon everyone sir. Dinesh bhai, Sudhir ji, Sudhir da, Dr. Sant.
Yes, good afternoon.
Good afternoon, all.
So, good afternoon, everybody. Welcome to this webinar. We will wait for another 2 to 3 minutes for some more people to join. So, just be patient. We will start in another 3 4 minutes. Amiji, can we start? We have 65 people, participants already. Or you want me to wait for another minute?
Amit, I can't hear you.
I said 1 more minute. It is 4 past 4.
Yeah.
So we'll start sharp at 5 past 4.
Okay.
Yeah, I think Dr. San, we can start.
Yeah, thank you. So, good afternoon and very warm welcome to all the participants who have joined across the India for today's FFI webinar on India EU FTA opportunities, challenges, and strategic roadmap for trade. As India and European Union move closer to concluding this important agreement, it's become essential for the custom brokers, freight forwarders, logistician, importer, exporters to understand the opportunities and compliances and their implication. So we have today the chairman of Triple FI, Amit Kamath. We have the immediate past chairman, Dushyant Mulani, Honorary Secretary Sudeep Day, Mr. S. Nataraja, who is President-elect for Triple FI, the office bearer, Dinesh Gupta ji, Dr. Nirav Thakkar, Sudhir Agarwal, Vinod Sharma ji, and all the other participants. And the most important, we are delighted to have the eminent expert, Mr. Sudhakar Kasture, who will guide us in today's session. With this, I request Chairman Triple FI Amit Kamath to deliver his welcome speech. Over to you, Amit ji.
Thank you, Dr. Sant, and welcome everybody. First and foremost, I appreciate your interest in attending this webinar. We as a federation always endeavor to have such webinar on very important topics, be it budgetary implication, be it the state of economy, and now the really important and burning topic is about this FTA, which India has signed with the European Union, which I am sure everybody has keen interest in. EXIM, trade and logistics it's a rapidly evolving world. There are opportunities, there are adversities, just as the sanctions which were imposed by the United States, which was an adversity for our EXIM trade. The FTA signed with the European Union poses as an opportunity. So we need to know what it means for us, what opportunity it has for us, so that we can do a strategic planning. So in today's webinar, we will dwell on this recent development, that is the free trade agreement which India has signed with the European Union. We will dwell on what are the market access opportunities it has for exporters. What would be the rules? What would be the compliances which would be required? When it becomes an opportunity for EXIM trade, it translates into an opportunity for custom brokers and freight forwarders and logistics service providers. So we will dwell on what impact it has on the custom brokers and freight forwarding fraternity. What are the strategic sectors in which would grow, which this opportunity would translate? We will identify those, and preparatory steps for logistics service providers from this in view of this development. And we have today international trade expert, Mr. Sudhakar Kasture. We are fortunate to have him, and thank you, sir, for consenting to address this webinar. Mr. Kasture has got 40 years of experience, and he's a mentor to the exporters. He's a corporate trainer and a director in the EXIM Institute. So without much ado, I would request, we are all keen to listen to Mr. Sudhakar Kasture. So let's Mr. Sudhakar Kasture take it over from here. Yes, Dr. San.
Yeah. Amitji, before we start, Sudhakar Kasture, I have two more people who will give their little insight. Is Mr. Dushyant Mulani, who is the immediate past chairman of Triple FI, and followed by him, the Mr. Nataraja, who is the president, chairman elect from 9. Yeah. So, Dushyantji, can we have your insight?
Thank you, Dr. Sant. Wonderful to have with us none other than Mr. Sudhakar Kastureji. Thank you, sir, for being always with Triple FA in all its knowledge endeavors. I appreciate your knowledge, deep knowledge, the content which you have, and your flawless delivery which is easily imbibed by all the attendees. Thank you, sir. Thank you, Chairman Amit Kamath-ji, Chairman-elect Nataraja-ji, Sudeep-ji for this wonderful arrangements. Uh, uh, this trade agreement, as conveyed by our Honorable Prime Minister, is going to be mother of all deals. So, but how it will unfold, where are we heading to, how much time it will take for the duty benefits to flow either sides. There's none other than Mr. Sudhakar Kastureji will be enlightening us. And thank you all the audience for this wonderful participation in this webinar. Kindly go ahead, Sansap. We are
Yeah.
eagerly waiting.
Yeah, thank you, Dushanji. We have Mr. S. Nataraja, who is a chairman-elect from Chennai. So, Nataraja ji, your insight before we start the webinar. Yeah.
Yeah, thank you. Thank you, Dr. Pramod Sens. Good evening to all of you. Dear Chairman, Mr. Amit Kamath and Mr. Kasur and my fellow members. I welcome everybody in this knowledge forum. As far as the custom brokers is concerned, it's a main supply chain link to connect all the people in order to execute the cargo logistics from one place to another place. The custom brokers is not only a just executor, is a knowledge partner between the customs and the importer and exporters. It's a lengthy process and a continued process to learn many things, to throw light on importers exporters issue. We are very eager to hear Mr. Kastur voice today, so that I don't want to continue my speech. Thanks for the opportunity for the wonderful session. So I'm also a spectator to keen to learn and spectating, watching our Mr. Kastur voice. Thank you very much.
Yeah. Thank you, Nataraja ji. So before we start, I just formally need to introduce Mr. Sudhakar Kasture. So as we see that he is really an expert in international trade, which includes foreign trade policies, free trade agreements, customs topics. You name the topic in international trade and he is expert. He is having also Exim Institute from where lot many students have passed and they are in the industry at very different places, really showing the success and knowledge which they are gaining from Mr. Kastureji. Kastureji is not new to Triple FI. We have organized his various webinars in past. He is also faculty for the IFF FIATA diploma. So thank you, Sudhakar Kastureji, to agreeing immediately when we made a request to you. And now over to you. I request participants, if you have any questions, please put it on the Q&A section so that we are able to take it after the presentation and the speech by Mr. Kasture. So please put your questions in Q&A. And Sudhakar Kastureji, now we are eager to hear from you. Please, yeah.
Good afternoon, friends. Am I audible?
Yes.
Yes, sir.
Yeah. So today we are going to talk about India-EU FTA, but whenever you talk of agreement, you need some background and that must be understood carefully well. So let's start with today's agenda. I have put it in 4 areas: total world trade and India's position, critically important, basic understanding of FTAs, few points. Then India-EU will go for detailed analysis. And then one very important topic I want to talk to you, that is digitalization. Because all your operations today are digitized and they are going to be more and more so. There is a new committee, new initiation from DGFT announced very recently, 9th February. So some points, some critical points I'll cover because that will shape up how custom brokers, freight forwarders and CHAs, how activities are going to look in the near future. First, very critical aspect, what is world trade? WTO figures are available on calendar year basis. 2025 figures are not available. So we are working on 2024. If you look at the total world trade is 24 trillion, $24,000 billion put together. China, United States of America, Germany, Japan, Netherlands, Korea, Italy. Top. If you look at the last column, you will find how many countries we have FTA with. But always remember, first 5 countries decide the world trend. And currently, if you look at China, continues to be in the same position. US continues to be in the same position. Germany continues to be in the same position. These 3 people definitely dominate the way strategies move because they represent more than 30% of the world trade. Where are we? We are at serial number 17. What we account for is 1.85%. So there are 2 ways of looking at it. Our world percentage is not very high. In fact, very low. Considering that we have 16% population of the world, we should have at least 5% contribution to exports. But our contribution is only 1.85%. So we need to improve upon, we need to increase our exports substantially. First part to understand. First 17 countries put together account for 65% of the world trade. When it comes to imports, we are at serial number 7. That means our imports are high. And our imports are very critical imports. Let me give you 3 or 4 categories only when we talk about it. Oil, chapter 27, we are dependent. Energy, we are dependent. Machineries, we are dependent. Medical devices, we are dependent. Chapter 15, edible oil, we are dependent. And with the current scenario happening in the Middle East, we suffer from this. So this is something very critical to understand. Again, if you look at top 3 countries, remain the same: United States of America, China, Germany. And very interesting aspect, United States of America has a trade deficit. Their exports are less compared to their imports. China and Germany, their exports are more compared to their imports. And very surprising, in spite of all that was going on throughout 2025, Chinese exports have grown by 21%. We need to understand number of things, but this is common understanding. And only first 10 countries account for 51% of world's import. I have deeper analysis. 9 chapters. You're all freight forwarders, so you exactly understand what each chapter, HS codes. 9 chapters account for 60% of our exports. And these 9 chapters are 27 petroleum products, 85, 84 electrical mechanical machineries, 71 gold and silver, 30 pharmaceuticals, 87 automobiles, 29 chemicals, chapter 10 cereals, chapter 73 iron and steel. Another 43 account for 156 billion. This I'm talking of last year, 24-25. And only these 43 plus 9, 52 categories account for 95% of India's exports. That means our exports have not really grown in all sectors. And in true sense, we are serious player in first 9 sectors because this is where our exports are more than $10 billion per chapter per annum. Very critical to understand. We need to expand. We have a target of $1,000 billion by 2030. If we have to achieve that, we have to expand everywhere. But currently, if you look at concentration, 43 plus 9, 52 chapters. And it's very interesting. When you look at the countries, you have 9 countries where your exports are more than 10 billion. And you have 49 countries where your exports are between 1 billion to 10 billion. Now, you will automatically understand the importance of FTA. In the first category of 9 countries, we either have a FTA or we are negotiating FTA. Same is the story with chapter 49. Most of the countries, if you look at, we either have already entered into an agreement or we are likely to enter into an agreement. My calculation is In another 2 years, we will have agreements with 134 countries. So FTA has to be a very important aspect of your thought process. It cannot be excluded because numbers are increasing to such an extent, and bilateral trade is taking shape because there is a new concept in the world market, friendshoring and nearshoring, and the geopolitical scenario. So this has to be understood carefully well. Then I will give you something very interesting. April, November, this is the period because official statistical data is available up to that period. When I look at this period in the same category, 7 chapters continue to all 3 years, 23-24, 24-25, 25-26. And again, if you account, it is 95% at the end of the day. 7 plus 37, 95%. 7 plus 39, 95%. 7 plus 40 chapters, 95%. What has added? Look at in 24-25, we have added 2 chapters, 21 and 24. And in 25-26, plus 8 agricultural. So by and large, our combination of export continues to be the same over last 3 years. It hasn't changed much in terms of chapters or in terms of volumes. Are we really diversifying? That is not happening. We are concentrating where we are, and somehow we are limited to those. Another lesson to learn, we need to expand. We cannot continue with this situation. When you look at imports, same story, 8 chapters, 10 chapters over a period of 3 years, April, November, and again, 95% continues to be same. But values are large. In first 8 categories, 341 billion. Same category in 24-25, 370 billion. 25-26, 10 categories, 402 billion. Our imports have increased. And it is presenting a very serious picture for us. Our trade deficit for 23-24 was $240 billion. 24-25, $283 billion. April 25 to January 26, we have already touched 283. My expectation is at the lowest level, our trade deficit will touch 300 billion minimum. Highest level, it could be anywhere between 320 to 330, 340 because of the major product change, that is increase in the oil prices. And oil, energy, something we just cannot do anything about. If you listen to last 2 days on television discussions that are going on, 85% of chapter 27, we are dependent in terms of imports, and 54% of our electricity generated using thermal power. Edible oil, again, one very serious issue what we are importing. So oil is something that is hitting us. And you cannot help it because the situation in the Middle East is dangerous. We hope it should get over as quickly as possible, but this is the ground reality that must be understood in the first place. Total imports, if you look at, almost $600 billion coming out of 12 categories, 27, 71, 85, 84 common. What is new added into this is chapter 39, that is plastics, chapter 88, aerospace, chapter 90, medical devices, chapter 28, chemicals. Imports are increasing, yes. Trade deficit is increasing, yes. Rupee is falling, yes. Imports are going to be costlier, yes. What is the option? Option is increase exports. That has to be our passion. That has to be our national focus. Now let us start with FTAs because this ground is something critical to understand. 380 FTAs across the globe. Today it plays an important role in global value chains. All of you know this very well. FTAs provide duty concessions or exemptions on negotiated items, not on all items. Some developed countries offer unilateral duty concessions like GSP, currently USA, EU, Japan. Least developed countries get DFQF treatment, duty-free, quota-free treatment, but imports from LDCs is very less in most of the countries. FTAs are negotiated primarily for market access. And when we talk of market access, it is growth of exports. Every country is looking forward to growth of exports. But growth of export primarily depends on what are your capabilities, what commodities you are looking at, what is your integration into global value chains, and what is geopolitical relationship. Another technical factor which is most important, trade and tariff barriers. So what FTAs help you? FTAs help you to reduce duties, therefore reduction in landed cost. It also helps you to negotiate trade and tariff barriers. So expansion of the market is possible because of FTA. That is the key point that we must understand. Current FTA negotiations are not limited to goods. They are goods, services, investments, intellectual property rights, IT related issues, everything put together. Negotiation process is serious activity because both the partner countries wish to push their respective agenda. Now I will take you to something, what is basic understanding. Few points you must understand carefully well because these are your day-to-day workings. Duty benefits are offered or preferential duties are offered. And for understanding this, you must understand few concepts. The first concept is MFN. What is MFN rate? It looks like most favored nation, but practically speaking, it is common customs duty. Most favored nation treatment derived from 1995, where WTO said you will offer the same duty rates to all WTO members. Those who are not WTO members, you can think of offering a different rate. No problem. But WTO members, you treat at one go. So when we say basic custom duty 7.5%, it is applicable to imports coming from 164 countries which are members of WTO. The situation that can change is depending on the agreement. The agreement can be like DFQF or unilateral like GSP or reciprocal like any FTA. So this is critically important. What is MFN? What benefit I am going to get, which is based on HS codes. Second is the concept of bound rate. Bound rate is commitment of a country that I will not increase my rates beyond this. So we have said our bound rate is 30 to 40% for industrial goods, 30 to 100% for agricultural goods, and more than 100% for completely built units of cars and alcoholic beverages. These are two critical points in India-EU agreement. EU always said, alcoholic beverages, you are charging very high duties. Cars, you are charging very high duties. We want these duties to be reduced because we want market in India. You know how long the negotiation went on? The total negotiation is roughly for 18 years. If you start from the beginning, it was stalled in between. It was renewed. Then it was looked into, a formal framework has been carried out, but it's a long drawn process. It has not happened overnight. Point is, every country wants reduction in duty because importer calculates landed cost. In landed cost, duty plays an important role. So duty concessions are offered on the basis of certificate of origin. There are two kinds of certificate of origin. One is wholly obtained, where the material is from both countries. Just understand this carefully. India-Japan agreement, if I take, if the product is made out of Japanese plus Indian materials, then it is called wholly obtained. Only if both countries, their raw materials are considered belonging to each other, therefore beneficiary countries. Partially produced means a product coming from Japan has some imports coming from China, has some imports coming from UK, has some imports coming from USA. If this is the case, then that import content has to be calculated. And then I decide what is the value addition that should be carried out. And therefore, there are rules properly placed. I'll explain what are those rules. Wholly obtained in a beneficiary country. Both India, Japan, for example, I am taking. When goods are partially produced, there are 4 concepts. The first concept described in our Indian trade portal in the form CC. What does CC mean? CC means change in chapter. You are importing a product from chapter 29. You are exporting a product chapter 38. This is chapter change. Second criteria, CTH. Change at 4-digit level, it 3808, exporting. There could be change in CTSH, 6-digit level change, 380893 becomes 380899. Please remember, 8-digit change is not considered manufacturing. It is mostly job work. Unless until product-specific conditions permit that, don't ever expect any 8-digit change as manufacture or origin. So these 4, and the 5th one, RVC, regional value content. What is the value addition done in the country of origin? If I am importing something from Malaysia, what is the Malaysian contribution? Malaysian contribution will include Malaysian raw materials. It will also include labor charges. It will also include profit. And the combination is decided. Each agreement will talk about this. Each agreement will have 2 notifications. One notification is called tariff notification, which will talk of duty concession. Second notification is called non-tariff notification, which decides the rules of origin. So if you operate under this, you must know this critically well. Let me explain this. Change in 4 or 8-digit level, 4, 6-digit level, whatever. 8-digit is not permitted. Definition of process of manufacture as per the agreement. Regional value content as per the agreement. And cumulation. Cumulation means if you are entering into agreement with multiple countries, let's say value addition RVC content for ASEAN is 40%. 40% value addition can be done partially in Thailand, partially in Malaysia, partially in Indonesia, partially in Singapore, because all these countries are members of ASEAN and we have entered into an agreement with ASEAN countries. This is very critical, the cumulation aspect, because when you enter into an agreement with EU, you are cumulating with 27 countries. So it's possible that product is manufactured in Germany, some small work is done in Latvia, some small work is done in Poland, something in Hungary, something in Germany, something. Put together, you have to come out with the value addition percentage. Then every country has a concept of exclusion list where we say we will not permit any duty concessions. And there is a sensitive list where we'll say we'll permit duty concession, but not immediately. It will be done over a period of time. With Japan, for certain items, we have asked a time limit of 15 years. So 7.5% duty will become 0 in 15 years. Equally small, little. Because we fear that should not disturb our domestic market. Every agreement has this. Now let us come to India-EU specific. And something interesting, I also want you to laugh a little, not be so serious about it. So I would like to give you some different concept. Every FTA is like arranged marriage. It is never a love marriage. In love marriage, you can dictate. You can tell your father, I like this girl, I want to marry her. Whether you like or you don't like, I'm going to marry her. Do whatever you want. In arranged marriage, every relative has a say. And I really wonder, sometimes our language play a very important role. Shubhamangal, everybody understands. Why is the word Saudhan? Whom are you? Are you telling the wife? Are you telling the son? Are you telling the father-in-law? Are you telling the mother-in-law? Please understand as say. And when you have a large family, think about this. Family of 27 countries, EU. Every country will have something to say. You will have to listen to that because it's an arranged marriage. You cannot simply say, I decide I will do this. No, everybody has to think. This point has to be critically understood. Then there is something else which is geopolitical. But I must tell you this. I want to show you three pictures. Number one, Xi Jinping. What is his quality? He never speaks. Most of the time is silent. Second gentleman, Mr. Vladimir Putin. He speaks sometimes. Third gentleman, I need not tell you, but I will show you. Still, he always speaks. But these three uncle matter the most for the world economy. I will give you reasons. Xi Jinping is responsible for manufacturing on a large scale. Putin is responsible for energy to the world, not only to India. If you study how much we have bought from oil from Russia, you will be surprised. In last 5 years, we have touched $55 billion. Very huge, largest supplier. And Mr. Trump says, you don't buy oil from Russia. What is important when it comes to US? Three things. One, capital. Second, services, more for India, H-1B visas. And third, technology. So these three uncles are going to play roles continuously, whether you like or you don't like. Can you change them? Answer is no, that is up to you. Two of them say you have no right to change. Constitutional amendments have been carried out. Third person is little worried because he doesn't have a very strong presentation in the US and Senate towards the end of 2026. So probably I believe if Democratic gets more votes and their number increase in Senate, and that balancing is also very critical, 53-47. So 47 becomes 51, Mr. Trump will have trouble. So I hope uncertainties will come to an end probably towards September, October, if you are looking forward to those elections. But this is the ground reality, must be understood. What is our trade relationship? EU is India's largest trading partner. 24-25 bilateral trade in goods, 136.5 billion. We exported 75.9, imported 60.7 billion. EU account for 17% of India's global exports, and India is 9% of EU's export market. Please remember, USA 20% of our total exports, EU 17%. But reverse side, our exports to EU is 9%. That means their import is 9%. As far as we are concerned and US is concerned, it is only 3% of US total imports. So this changes the way they look at each other. This has to be understood. We want to increase exports. They also want to increase exports. What are the products? If you look at the products, top Indian exports, petroleum, electronics and smartphones, textile and apparels, machinery and computers, organic chemicals and pharmaceuticals, iron and steel, auto parts, gems and jewelry. What are our major imports from EU? Industrial machinery, electrical equipment, chapter 84-85, aircrafts and parts, medical devices and scientific instrument, electronics and plastic, cars and auto components. Anything likely to go down in case of imports? Answer is no. On the contrary, imports will increase because of technology orientation. And there are certain very funny things. I will tell you that how when we go to that particular topic, which is very, very interesting, where the countries will get benefit overnight. We'll have to see how best it works. When you look at the text of the FTA, and this is a serious content, so please pay good attention to this. First, understand some crucial information, because agreement is entered into but not implemented. So it is like engagement, it's not marriage. Engagement and marriage are two different things. We agree on something, marriage is yet to take place. Can you guaranteedly say that you have engaged means marriage will take place? Answer is no. Unless until marriage takes place, it doesn't become a legal format. And for that, two critical aspects must be understood right in the beginning, because we are talking of 2026. GSP benefit for India has been withdrawn with effect from 1st January 2026. This withdrawal continues up to 31st December 2028. This is done based on Article 8 of EU's Regulation 178. Article 8 says, any country singularly exporting more than 17% of EU's total import of that commodity, EU will not grant them GSP benefit. So we lost GSP benefit effective from 1st January 2026, already done. People didn't talk much about it because people don't look at the details. So we lost the GSP benefit for Indian origin goods with effect from 1st January 2026. Which are the items on which we lost? We lost it on chemicals, plastics and rubber, textiles, metals and machinery, automobiles and transport equipment, mineral products and others. Like us, Kenya, Indonesia also lost. What it means for Indian exporters for the year 2026? Loss of preferential duty benefits, potential increase in landed cost and pricing pressure, need for immediate review of EU trade flows, contracts and price strategies, reassessment of origin planning, alternate trade arrangements. When we talk of EU agreement, please remember there is a process of implementation. I have elaborated it. There are 7 steps. Step number 1, publish negotiated draft text. What we have negotiated is a draft. Publish it. Legal revision and translation into all official languages, German, French, Dutch, whatever you think of, Spanish. Propose the agreement to the Council for the signature and conclusion. Then adoption by the Council. Signing of the agreement between EU and India, that will happen at stage number 5. European Parliament's agreement, stage number 6. Council's decision on concluding the deal, stage number 7. So, if you look at the current scenario, my expectation is it may take 1 year. Whatever duty benefits announced on 27th of January 2026 may be available to you from 1st January 2027. It might get early if geopolitical situation changes, but still the process takes time. It is not going to happen overnight. Why I am saying this? Because on 28th January, when it is announced, people start sending me HS code. Okay, sir, this is my HS code. What is the duty? Please remember, these are all texts. It has not been approved. It has not been agreed upon by 27 countries. Unless until that is done, this is not going to happen. We will have a direction. Now, what is the direction for the year 2026? We are going to pay higher duties. Landed cost of Indian products is going to increase because GSP benefit has been withdrawn. The benefits will come to you probably, if it is really on the fast track, it might be from September onwards or October onwards, or maybe on 1st of January. But expected time, what I learned from all the countries, 27 countries or particularly from European Union, is roughly it will take about a year. So expect it from 27. There are certain key observations by Sangeeta Godbole. She is ex-IRS. She was trade negotiator for India. She was Director General of Export Promotion Council for Services. Very good understanding of FTAs and very beautiful observations. Those observations are critical for India, so I'm telling you before. The first observation, government procurement. Government also procures. If you look at India, EU, India, UK. India, UK, we have said, again, interestingly, it is signed in July 2025, not yet ratified. So the process takes time. There they said, government procurement, both sides. Our government buys goods, their government buys goods. What is the access given to each other? That is why this is critically important. Observation here is, EU is set to unveil its Industrial Accelerator Act soon. A leaked draft of the act reveals that EU is all set to increase the local content requirement, not only in the government procurement, but also in public supported investments. The moment you say local, it is material originating from 27 countries. That means imports are going to be less in government procurement. Second, significant foreign investments in emerging key strategic sectors will be subject to prior approval with conditions that may include ownership caps, technology transfer requirements, local content obligation, R&D investment commitments within the EU. Again, it is going to reduce. Even in our public procurement, if you study that document carefully, where it limits what is the import content. Somewhere in chemicals, it talks about 20%. That means 80% material has to be of Indian origin, only 20% you can think of bringing from outside. So these are critical factors. Expectedly, it is packaged to climate neutrality, low carbon, decarbonization, sustainability, resilience, and such terminologies. So carbon footprint is going to play a very, very important role. India took a leap of faith into the government arena of the UK, in the UK. If the same is traced to the EU at a later point, India opens its huge procurement market only to be confronted with new restrictive EU conditions even before the bilateral trade agreement enters into force. This is one precaution. If you are committing to any government procurement, you will have to look at. This is coming from a serious officer of Government of India, and therefore this plays an important role. The second, CBAM, Carbon Border Adjustment Mechanism. This also has impact. She has given some examples. Recently notified benchmarks for EU steel production are lower than expected. They will drive up US emission trading system prices, which currently hover around 9,000 rupees per ton. CBAM fees at the EU borders will be a combination of the benchmarks and country-specific default values declared by the EU. India-specific default values for iron and steel sector are absurdly high. That means iron and steel both will face problems. This is already started from 1st January 2026. There will be some concessions available for SMEs, but large companies will have to face this. Currently, this carbon border adjustment mechanism is paid by the importer. How long importer will pay? If, look at the last sentence, the additional annual punitive mark of 10% is also included in the default value calculation, taking default values for 2028 at 30% higher than the 2025 values. In other words, 9,000 per ton will become 27,000 per ton. Will the importer absorb? Answer is no. Is he going to ask you to reduce the price? Yes. Can you reduce the price, or can you make your product carbon neutral? Big question mark. Are we moving towards sustainability? Big question mark. So what is the option? After extensive consultation and audits, the draft notification indicates industrial installation-wise emissions intensity for 258 industrial units for 2023-24. India must ensure that these emission calculations are accepted by the EU rather than EU's extremely high default values. Rough edges between the two measurement systems can be resolved through a joint mechanism. Both regulations increase uncertainty for exporters and manufacturers. You must work with India to bring regulatory certainty to trade. This is a question that is open because in the text, we have only said we will do consultations. There was no agreement reached on whether carbon taxation would be applicable to Indian goods or not. And it is unlikely to change as far as I feel, because it is an environmental issue. If some country is facing problems with environment, they are going to look at it. There is no other option. Current trade, I already told you, 136.5 billion. Services trade, 83.1 billion. Tariff liberalization, preferential access to 96.8% of tariff lines. Very good. And to give you an idea of this table will tell you marine products, previous EU tariff up to 26%, 94 tariff lines will be duty free. In chemicals, 59.3%, immediate elimination, plastic and rubber, 62.7% duty free, leather, footwear, textile, apparels, 100 duty free, gems and jewelry, 96.6% duty free. This will give an idea of what is the applicable duty as on date and what would be the concession that is available to you once the agreement has been entered into. For the year 2026, please consider previous EU tariff. This will be the tariff applicable to your products. You should calculate that. Rules of origin and compliance implications. If you are a custom broker for imports, you are already aware of Carotar 2020, how customs apply Carotar 2020 to all goods coming under FTA. When it comes to export, again, wholly obtained or partially produced. The most important point to note is substantial transformation. That means significant manufacturing process must happen in the exporting country. If I am exporting to EU, significant manufacturing process must happen, which may include minimum local value addition, change in tariff classification, specific manufacturing processes. These three, one has to be very, very careful about it. Compliance documentation, statement of origin issued by the exporter, certificate of origin issued by authorized body. If you look at ICE Gate 2.0 and digitalization, this will be online in no time. We are progressing on that direction very fast. There will be some initial teething problems, but we'll have to sort them out. And for that, you require documentary verification, production audits, and supplier verification. Compliance cost will reduce. It will have impact on. Failure to meet rules of origin may result in loss of tariff benefits, penalties, and customs dispute. This is bound to happen. So that has to be taken care of. Impact on custom brokers and freight forwarders. First, look at customs facilitation provisions. Again, you need to study trade facilitation agreement to understand WCO guidelines for this. What digital system says? Electronic customs declaration, automated clearance systems, digital trade documentation, reduce paperwork, speed up cargo movement. But faster clearance, key measures include risk-based inspections, simplified customs documentation, advanced rulings on tariff classification. Wherever you have a problem, get advanced ruling so that you are sure about it. That is something critically must be understood. Role of customs broker. If you look at this angle, verifying rules of origin compliance, preparing certificates of origin, ensuring correct tariff classification, and most importantly, trade compliance consultancy services. Please remember, in electronic documentation, role of a customs person going to the office and getting things sorted out is going to get reduced. They have to be knowledge partners. Most of the companies will look forward to a knowledge partner. They don't look forward just for clearance. Clearance will become automated either by choice or by default. Sooner or later, this is bound to happen. And let me give you one example. I always give that example. Share transfer taking place in exchange. Earlier, it used to take 30 days. When we introduce Demat account, you don't bother. System takes care of everything. You just call the broker, you telephone him, and you tell him, and all he says from your registered mobile, you call me, so that there is authentication. Money is transferred digitally and shares are bought. How many of you have ever gone to the company कि यार जरा original दिखाओ सच में मेरे नाम से share transfer हुआ है कि नहीं हुआ है? In good old days that was there. Today it is not there. Same process is going to happen in customs. It may take a year, it may take 2 years maximum, because of the compulsion of TFA, because of the WCO, because of the geopolitical situations, all combined pressure for changing this. What is the impact on freight forwarders? You must comply with EU's import regulations across 27 member states. Critically important. If something is different in some country, that has to be followed. Freight forwarders will see increased cargo volumes between India and EU, bound to happen if import-export increases. Greater need for integrated logistics services, higher demand for documentation management, and with electronic. And it is happening. There was a case study from Tata Steel that they have imported goods using the electronic bill of lading, and process has been continued and time has been reduced. So with such examples, this is bound to progress. Regulatory alignment and sustainability standards, critically important. You have to follow sanitary and phytosanitary measures, compulsive. Measures must be based on scientific evidence and international standards. With EU and with USA, this has to be taken care of. And there are serious complaints from EU. I know them personally. The question is very simple. Why should you apply BIS standard when my product already is above higher standards? If my standards are higher than your local standards, why are you asking me to comply with BIS? Which is very right. If you produce, it is like you are producing automatic washing machine and I'm asking you to establish first semi-automatic washing machine standards. Doesn't make sense. EU is going to pressurize on this more and more. So please remember, scientific evidence and international standards, these are two critical areas to follow when you deal with products related to standards. Technical barriers to trade have to be sorted out. Great process of negotiation, product standards, certification procedures, and here mutual recognition agreements play an important role. If our laboratories are accepted by EU, then your problem is solved, your cost is reduced. If it is not accepted by EU, your cost will increase. That has to be seen. These are two very critical aspects. Sustainability and environmental commitments, critically important. And there are issues which are not normally connected. For example, labor rights, climate cooperation, environmental cooperation, responsible supply chains. We have been talking so much about deforestation, reforestation. What is happening? We are talking about reducing fossil fuel. What is happening? All has to be studied because this is going to be a very, very important aspect. And currently, it only says that it is also addressed through cooperation mechanism. It is not part of FTA so far. We might have to increase this. We'll talk about it subsequently, will happen. But currently, this is a problem everybody is going to face. Strategic sectors likely to benefit. Exports over 33 billion from labor-intensive industries are expected to benefit. Apparel, textile, leather and footwear, gems and jewelry, manufacturing industries, 22% in EU markets, previously faced tariffs. With implementation of FTAs, engineering goods, machinery, electronic chemicals will get important and landed cost will reduce. Agricultural exports, product expected to gain tea, coffee, spices, fruits, processed food products. Services and digital sector, IT and IT-enabled services, consulting services, financial services, digital payments and technology platforms, because they are all going to get benefited out of this. Preparatory steps. For exporters, restructure supply chain to meet rules of origin. Let me give you an example. A German company has a plant in Malaysia. You may place order on Germany, but goods can be sent from Malaysian plant under Malaysian certificate of origin, so that in the current scenario, you can take ASEAN benefit. Restructure supply chains. Adopt EU regulatory standards. This has to be done during 2026. Invest in sustainability compliance. For customs brokers, develop expertise in FTA documentation. Teach people, teach your clients how to do this. Verify origin certification, have a proper network for this. Advise exporters on tariff benefits. Each custom broker, each CHA knows what products are being imported by the company. My suggestion to you, to enhance your quality of services, you should list out that these products under this FTA is going to get this benefit. Communicate this. This is something critically important. This is part of being a knowledge partner, has to be done. For freight forwarders, implement digital trade documentation systems, critically important. Train staff on EU customs regulations. For logistics companies, FTA advisory services for exporters. Very, very important. Because don't expect all SME exporter to know everything about things. There are technical things that needs explanation. Be prepared to do this. Those days are gone. Even when I look at SOPs of the companies, I start laughing. You know what the SOP says? Following documents are attached. On the right side, you have a column. You keep up tick marking, packing list such as invoice, certificate of origin, everything. And then call the custom broker and say, tomorrow evening, I want my cargo. Nobody is actually taking initiative in developing these aspects. This is something very critical one has to do. Now let us come to digitalization, because this is critically important. Let me tell you why. IceGate 2.0, you may be aware of. Key features: modern personalized dashboard and digital interface, bilingual interface, live status, customs notification and chatbot support. Robotics will come into picture, chatbots will come into picture. Web browser based filing for bill of entry, shipping bills, IGM and EGM. Major recent enhancement: online module, IceGate 2.0, applicable digital filing, approval of permissions under Section 65, Moore scheme, as well as streamlining operations in bonded and special warehouses. Benefits: paperless customs compliance, transparency and tracking, ease of doing business. This is coming under IceGate 2.0. What is WCO saying? WCO is saying key digital initiatives: WCO data model, that means model will be available, standardized electronic data exchange framework, single window and paperless custom support, smart customs project, promotes AI, blockchain and modern technology, electronic certificates of origin and ATA card. This is going to result into benefits. Now, something new I would like to tell you that was announced on 9th February 2026 by DGFT. What it says: background, announced in Union Budget 2025-26, it is a digital trade Facilitation Bill 2026. Core objective: grant legal validity and enforceability to electronic trade documents, digital identity, and trust services. Please remember, this changes the whole perspective. I will repeat once again: grant legal validity and enforceability. Now I say I want 3 originals of bill of lading. It is a negotiable instrument. In other words, there is no legal validity or enforceability if it is an electronic document. This facilitation bill says this is what we are going to do. And the time period for reacting is 30 days. So reply if you want to make a commitment on this, objections on this, anything that you want to say or enhancement of this, please do make a comment. Electronic trade documents, digital identity and trust services. Key highlights: electronic documents legally equivalent to paper. Legally equivalent to paper. Secure tamper-proof and auditable digital records. Cross-border recognition of reliable foreign systems. And most important, last line you read: proposed amendments to IT Act, Negotiable Instruments Act, and Indian Stamp Act. If all these are carried out, paperwork will disappear. Everything will get settled through digital working. When is this trade notice issued? 9 February 2026. Please react to this. But this gives you the direction of the government. We are moving towards complete digital transformation. Therefore, exporter, importers, customs broker, freight forwarders, everybody has to comply with this sooner or later, either by choice or by default. To conclude, we are going to have agreement with more than 100 countries. We all must understand the fine print. 2, digitalization is no more an option. On the contrary, it is compulsion. IceGate 2.0 and digitalization initiatives of Ministry of Commerce, we need to prepare fast. How fast? In my own saying, we should be ready immediately. I mean yesterday. I'm not prepared to give you tomorrow. Yesterday you should be ready. Finally, wish you all the best. It's my habit to give a thought. Thought for today is this: accept both compliments and criticism. It takes both sun and rain for a flower to grow. Whether you accept FTA or you criticize FTA, whatever you wish to do, you do. At the end of the day, we have to remember we need sun and rain both for a flower to grow. That flower is $1,000 billion exports by 2030. We need to do everything that is possible for this. I am greatly thankful to FAI for giving me this opportunity to talk to you. And I hope this will give you insights on EU FTA and practical implications of this. Thank you so much. Now I will stop sharing.
Thank
If
you.
there are any questions,
Yeah.
I would like to answer.
Yeah. Thank you, Mr. Sudhakar Kastura. It was so wonderful. And really, I'm quite good. And the focus on the custom broker, what they should do, I think your insight will be definitely helpful for people. I have few questions here, but before that, I will also request we have many office bearers of Triple FI who are there. And if they have any comments, they have questions. So I request them. We have Mr. Sudhir Agarwal, who is heading the education wing and the women's wing here. We have Vinod Sharma ji from Pune. We have Dinesh Gupta ji and Dr. Nirav Thakkar. So if you have some insight to share or some questions, so I request you to go ahead. Yeah. So Sudhir Agarwal ji, maybe we can start from you.
Pramodji, I will just take your excuse today because what has happened, some crisis was going in my office. So while I joined the webinar, I think after 10 minutes, I had to look into those issues because they were the priority. As you know, because of this Gulf region crisis, there's a lot of cargo which is coming back to town, and you know, the shippers are on our head. So unfortunately, I could not hear Sudhakarji in totality, but I will go through his presentation, and I am totally aware ki what Sudhakarji, whenever he takes a webinar, I've listened to him earlier also. He is such a good teacher, and the kind of depth he has in his on his subject is tremendous, and the way he describes and put before us, it is very very easy for any custom broker to understand. So today I won't be able to speak on the subject because of my non participation, because of problems going in the office, but I certainly believe that this would have been one of a very good eye opening webinar. And as I heard in the beginning, what he was telling is that now this FTA in principle we have agreed upon. It will come, the actual FTA will get signed by the year end, and maybe the fruits of it will be coming from next year. So we have to prepare for it, because every free trade agreement is finally targeted towards growth in exempt trade. Basically, we need to access the market of other country, and so does other country believes so. So now with so many free trade agreements are coming up, we should be able to understand the finer points of it, and we should gear up our organization. Tomorrow, if the business is coming to us, we should be able to do it in a correct way. So with this little thought, I will go back to you, Pramod ji, for further taking this webinar further. Thank you.
So Sudhir ji, we have a recording of this, so I will request Sagar to send it to you also. So you will have PPT and recording also, so which will be helpful. Yeah.
Thank
So
you.
any other thoughts from office bearers we have here?
So, sir, one thing, if you please repeat, I did not quite get that part where you said that an 8-digit transformation is not manufacturing.
Yes.
So that part I did not quite get, sir.
At the larger level, 8-digit is more of a
It's a chapter change.
job work.
8-digit transformation is chapter change.
No, as far as FTA is concerned, 3 principles are accepted: chapter change, change at 4-digit, change at 6-digit, change at 8-digit. Mostly what all the FTAs say that it is a job work. It is not actually manufacturing. You are cutting something and packing, you are repacking, anything of this sort, which might change.
Okay, so what you're saying is, sir, what you're saying is 6-digit remains constant, only
Yes.
the last 2-digit changes.
Yeah.
Okay.
That's the idea behind it.
So Sudeep ji, the simple example is the iron item is taken and you do some cutting on that, or it will be a 8-digit change only. But when you make from that iron item some part which will go into 84 chapter, it will be a really change into the first original digits. Yeah, that's what.
And sir, frankly speaking, we have so many FTAs. What does the record show? Has India gained out of it or lost?
No, you cannot say gain or loss. It all depends on what you have negotiated. Negotiation is done by the government. If you have given duty benefit to a particular country on a particular product, and if that product is coming, where is the problem? It's voluntarily agreed. You look at when EU extend GSP benefit to India, it's voluntary agreement. EU has agreed to this. EU importer, I am reversing it. EU importer cannot say, okay, how can you give benefit to India? That is calculation of the government.
So that is the calculation I'm referring to, sir.
In practice, what has happened, some manufacturing takes place in Asian countries. Raw materials are sourced from China. Our fear is Chinese goods are taking route via ASEAN countries entering into India at zero duty. If they directly come from China, I will charge them duty. That was the basic objection, and because of that, Carotar 2020 was introduced.
Correct.
So it all matters of how you negotiate. There is a problem with industry also. We always talk of don't reduce the duties. We want to protect the domestic market. How many people, how many companies really represent that I want reduction in duty overseas because my product has potential to grow? So one cannot say that we have not benefited or we have benefited. But yes, now, for example, you have introduced PLI scheme. In PLI scheme, who is the maximum beneficiary is Apple. But they assembled the product over here and US said, I will not charge any duty on smartphones. Smartphone exports have increased. Just look at the figures, you will come to know how much is the increase on that. Simultaneously, components for smartphones, imports have increased. So product wise, you'll have to look at what is what. And depending on the narrative of the industry as to how one should look at it's a deep study. One has to really go into research country wise and then make a presentation, then it will make a difference. Generic presentations don't make any sense. So, are we benefiting? Yes. If we are not benefiting, why are we entering with 100 countries? No need.
I fully agree.
One interesting step I will tell you. Africa is moving towards customs union. That means goods exported from Kenya to Tanzania, Kenyan fellow will not file any shipping bill, Tanzanian fellow will not file any bill of entry, no customs clearance, no duty to be charged. How will I protect the market if I don't have FTA? My product will be subjected to duty if I'm exporting it. So what option it gives me? The option it gives me, set up a unit in Kenya, manufacturing unit, 65% material goes from there, 35% added. Then I have market 54 countries at zero duty. All 54 countries at one go gets covered into this. I will have to change my way of thinking that till today I was not thinking of a joint venture. Now I will have to think of a joint venture. What EU is going to do, same thing they are going to do. They have already done it in number of how many foreign companies are operating in India. All big German companies have subsidiaries in India. All big French companies have subsidiaries in India. So that will be a business decision that will be taken.
Yeah.
So a lot of commercial decisions are taken on the basis of taxation policy, sir.
Yes, I fully agree with you.
Yeah.
But then again, when it comes to taxation policy, if you look at indirect taxes, if I get my components at zero duty, no custom duty payment, whatever GST I pay, I will get in the input tax credit. So I'm tax neutral. Then question comes, income tax. Income tax again, if I have double taxation avoidance treaty with that country, subsidiary will help me. Where is the problem?
So only problem is no one, all these, as per my understanding, sir, all these FTAs, the major research point is the HS code. And we know also in customs clearance, HS code is given the least importance, be it the custom broker, be it the custom officer. They give least importance. कुछ नहीं होगा तो अदर में डाल देगा, अदर में जाके क्लियर करो. So getting this calculation correct is really
correct HS codes and rules of interpretation. My suggestion to you other way around. Take a class for your client. Explain them the concept of HS code. That nobody is doing.
That is what I'm saying, sir. That is what I'm saying.
A person who has been given, and what the company thinks, I have given this job to my CHA knows this subject. Why should I bother about it? He'll find out what is right.
Mr. Kasturi, we have
in digitalization, you have to work. There is no other option. You have to learn. There is no other option. And by force, we will learn it. Let me give you one example, very interesting example. Have you ever tried going on Central Railway, Western Railway, local train in Mumbai? Have you ever tried that?
Once.
Try it once. Interesting aspect, how digitalization helps. You want to get your shoes polished. The fellow has a QR code and you pay through mobile. How has he learned? What is his education level? He's just polishing the shoes. But he knows because it is essential for him to get money like this. Same story here, that if we have to move towards digitalization, if it is compulsorily coming, we'll have to train the people. There is no other option. The more it goes, One day will come, I am telling you, where my request to the government is remove manual intervention in passing shipping bill and bill of entry. You fix the codes, you fix everything, you fix all whatever information you need. Once the information is tallied with the help of IT, process clearance should be automated. Out of charge should give, my computer should tell me out of charge, not any officer.
Very true. Yeah. We have still two questions. They are same. Sir, how can refer a tariff concession for all commodities? Whether can we get online or any classification
It is
books available?
available on Indian Trade portal.
Indian Trade Portal.
At a given point of time, if you know your HS code correctly, you can find out 5 entries for 5 different states, 5 different
FTA.
countries
Yeah.
at one go.
Yeah.
And the process will take hardly 1 minute 30 seconds.
So good. So that means people can find out that yes, this is my HS code, this is a FTA tariff, which is
Not
there.
only FTA tariff, it gives you the rules of origin, it gives you RVC content, everything it gives on a screenshot.
Great. Yeah. So again, we will share that with people. Yeah. Any more points from anybody before we close? Yeah, Dr. Nirav.
Thank you, Sudhakar sir. I think the way you've explained this, I think no report, nothing has ever explained it in such a way, and the way it's so comprehensive and so detailed study that you must have done to get this across, sir.
Thank you so much.
I want to, sir, still understand one aspect, although you have it in your presentation. You mentioned that it has been over the last 18 years where this discussion was going on, and where because our CPUs and the alcoholic beverages were very high rate of duty which we have. Now, as against that, India's important products which are being exported, and especially with the in the EU, which will be our let's say textiles or leather products, and also jewelry, which is also one another aspect. Now, you have explained in your presentation where it was mentioned as an example about what we have requested. I want you to understand, like, if they have asked us for a reduction in these products, what has India's request has been on tariffs on these products in the EU specifically?
First of all, in EU, tariff is not such a big problem.
Yeah.
For 2 reasons. Their tariffs are anyway low. Secondly, you have been enjoying GSP benefits for a number of years.
Correct.
So what am I losing as an importing country? I'm not losing much. I'm not losing greater amount of revenue. Under GSP, I was giving you 0 duty or concessional rate of duty, whereas charging you 2%, 3%. My problem is, on alcoholic beverages, you want to charge 150%. Can I sell Scotch whiskey? Cost is too high.
Too high.
So what they have asked, and very interesting, I'll tell you, you will be surprised if I give you the analysis. With UK, we have agreed a quota of 50,000 cars.
Yeah.
And the duty is reduced to 75 directly, 150 to 75. Tell me, in India, 50,000 cars booking, how much time will it take? 24 hours.
I was
50,000 people will book the cars 24 hours.
quickly.
What is the benefit for UK? 50,000 crores.
Correct.
One car is 1 crore minimum.
Correct.
Now you bring that duty to 25%. We have another target in EU, that is 250,000 cars. 250,000 cars will enter. Each one is costing 1 crore minimum.
Correct.
Do you think we don't have 250,000 people in India who wants to buy an imported car?
Sir, I have been, the day it was announced, I have got calls asking that, when is this getting penned down and when is the car we can import now? Because today 250% duty, all of a sudden they were like, this is coming up. So
Why
I'm
not?
sure the way you're saying 24 hours is also very short, this period. Yes. Agree.
So they will get immediate benefit.
Yeah, I agree.
Great.
And these
True,
were
sir.
two demands, specific demands from entire EU. One is alcoholic beverages and second is cars. Because the duties are very, very high. You cannot get market access if you charge 100% duty. What have we agreed to? With UK, we have agreed in 10 years. First year, we'll reduce it from alcoholic beverage 150 to 75%. And then it will go down to 35% in rest 9 years.
Okay.
Every year we'll keep on reducing annual installments.
Got it.
Great.
Yes.
So
Thank you for the
One
insights.
thing, if you want to restrict this, I can tell you one thing, drink only one peg. Because what people tell me, I don't drink, so I don't know, but what experienced people tell me that after 3 pegs, you don't understand whether it is Scotch is originating from England, Scotland, or it is Desi Daru. Because you are intoxicated by that much
By
that you
then,
don't even realize what you are
yes.
drinking.
नहीं sir, वैसा होता नहीं. What they don't understand is the amount of water that has been given or the ml.
My point is why I am saying this, because I don't drink, so I really don't know what happens. That's
So
what people tell me.
नहीं, ऐसा नहीं है. But it is actually what happens is instead of giving a 60 ml, they keep reducing it. So that you don't get to understand.
good.
Great
So
examples to explain. So thank you.
yeah. So with this, I think we had a very interesting conversation, good questions. So I hand it over to the Honorary Secretary Sudeep Dey for the formal vote of thanks. So over to you, Sudeep ji.
So thank you, Dr. Sant. I'm sure we can call this webinar insightful. This India EU FTA webinar. And first of all, a successful webinar so speaks for itself, but there are people who are behind this webinar and they need to be thanked. So first of all, yes, sir, Mr. Kasture, thank you. Thank you for not just sharing your knowledge, your in-depth knowledge with us, but also sharing the most valuable thing, that is your time. I mean, we are what? We are about 1.5 hours, and your 1.5 hours is really valuable. So thank you very much on behalf of each and every one of us, not only those who are on this panel, but also the audience who are there out there. So, and we hope to have many more sessions in the future, because as now one side of the world is into wars and one side of the world, that is us, are into trade agreements. So it's a very peculiar situation, and we will have such peculiar contracts and situations coming up which actually need in-depth study.
Yes.
And who better can assist us than you? So thank you again very much, sir. So before I thank the others, I would of course like to thank our chairman for encouraging us for such knowledge initiatives, if I might say, for FFI. I mean, every EC meeting we have, though he is constantly harping on that knowledge, education. So, and these platforms are extremely important for our fraternity, as I mean, what should I say? Global trade policies are evolving and new agreements are taking shape. So, constant learning is of our utmost importance. And thank you, Chairman Sir, for encouraging this subject for FFAI. And I would also like to express my thanks to the team working behind, of course, starting with Dr. Sant, Nirav, all the people at the Secretariat, all the office bearers who are helping. And this is what is making FFI more active, more vibrant, and how the name of FFI, which is I think the utmost service we can do to a banner is to spread the name and speak as to what we are doing and be visible in the market. So thank you, Dr. Sant, and your whole of your team for doing it. Last but not least, yes, the participants, thank you for encouraging us with your participation. I mean, it is only without your participation, nothing has a meaning to us. So thank you for participating. Thank you for being attentive. And thank you for the questions you're addressing. Thank you for requesting to have this PPT. It shows your interest. And so until we have the next webinar, I think we can say goodbye. And if anyone else wants to say something, I think I've thanked everyone.
Thank you. Thank you, Sudeep ji. Thank you, Sudeep ji. Yeah. So
Thanks, Sudeep sir.
Chairman sir, with your permission, we may.
Thanks to everyone. Thanks, Mr. Kastude. And as usual, it was a very wonderful and insightful webinar. And our members and participants really look forward to your webinars because it's full of content and always very, very, very relevant and in sync with times. And there's a lot of takeaway from the webinar to everybody. Thank you so much. We look forward to many more such webinars on different topics pertaining to logistics and custom clearance in the EXIM trade. And also, I would like to thank the participants for their active participation. And your interest in such webinar inspires us to organize much more webinars like this. And if there is any particular topic which is related to EXIM trade or logistics on which you would like to us to organize a webinar, we would be more than happy to do so, and would more want to know on which topics the webinar has to be organized. Maybe Sudeep, we can circulate a kind of a form in which we can have these topics and suggestions coming from our members. With this, thank you once again, Mr. Kasture. It was wonderful to have you with us today. Thank you all my office bearer colleagues for joining this webinar. Dr. Sun, particular thanks to you for organizing this and spearheading this. Thanks once again, everybody.
Do I close, sir?
yeah.